Imagine that you have a crystal ball and know what's going on in the battlefield of a stock. Well, that's called level 2 or market depth data. Ever felt like the market knows what you are about to do? Place your order and then boom, instantly the market goes against you. Well, that's because you're trading blindfolded. Either you're not using level 2 or you're using it wrong. Well, not anymore. By the end of this video, you will learn how to use level 2. We're gonna go over the pros of level 2 and the cons of level 2, which most of them will turn into pros, and how it sharpened my trading skills and most or biggest mistakes that actually traders fall into using level 2, and how you can improve using level 2. My friend, what's about to be said in this video and the information are not out there on YouTube. I've searched, at least I've done my job trying to search for important things. Some of them are said, but a lot of things are not said on YouTube. All the level 2 videos are basically just explaining what is level 2. So let's dive right in. Hey my friend, Zach here, and welcome to the world of investing. If you are a struggling trader or new to trading, this channel is for you. Folks, 8 to 9 years of experience. I've taken out all the garbage information. It's all important information in this channel. I'm not gonna load it with garbage information just to load information and make my videos long or whatever it is. I'm just gonna put in what's important and everything else. So make sure you tune in, subscribe, hit the like button, and let's start with level 2. So what is level 2? Level 2 shows you an order book, in-depth order book. It shows you the buyers and the sellers, at what price and the order sizes. It shows you a complete order book. Also, it shows you the time and sales in brief and short, simplified definition. So let's get on the screen and show you what level 2 looks like. Level 2, let's split it into 3 sections. This section and this section, the middle one, and the one on the side. Usually level 2 is those 2 sections. The one on the left is for the buyers and they call it the bid section. So let's divide it. So they have the venue here. Some brokers are called MME. Okay, so it's a market maker. EDGX is a market maker. NASD, NASDAQ is a market maker. ARC, ARCA is a market. BATS. Those are all different market makers, and I really don't care about them. I'm just letting you know what they are. I don't really care about them. Here is the bid. So that is the bid price. Basically, so buyers are telling you, I'm willing to buy this stock at $14.80. Okay, through this broker. What is the size? 1,200. Okay, some other brokers that have level 2. They take out the last 2 digits. So you have to multiply by 100 everything. I hate them, I don't like them, but sometimes I have to use them. Luckily on this system, I don't have to use it. So basically I'm showing you here, it tells you the actual size, exactly. So here's 5,000 shares, some of them say 50. And then you have to know if it's 50, it's a 5,000. So you multiply all of them. Anyway, so they're telling you here what is the venue, what is the bid, and that is the highest bid. Okay, they buy the highest, and those are the sizes. And here is this section is the ask. So the sellers. I have that amount of shares that I want to sell, 300 shares at $14.84 through this venue for this MME, whatever it is called, MMD, whatever it is. I really don't care about them. Now, how do I have it? I have it colored. So basically the first patch of colors, all at the same price. $14.80 through different vendors or through different market makers. And here are the sizes. Those are the bidders and those are the ask. The second price under the bidder is $14.79. So there's 1 penny difference. There's only 100 shares at this price. The one after 78, $14.78, 5,000 shares sitting there. The one after 76, there's only 100 and 100, 200. And then the one after that, it's in black now. Okay, so I separate them in my eyes. This is not playing, guys. This is just a picture. And then when I hit play, you'll see how it's gonna start moving up and down. Over here, the same thing. Okay, the ask, the highest, the lowest ask. Okay, so the closest to the bidder is 84, 1484. There's almost roughly 300, well, 600 shares or 598 shares. And then the price after that comes higher than that by 1 penny, it's the blue, and then the purple, and then the green. There's only 2 shares at 1488, and the one after 1489. The spread is the difference between the bid and the ask. So this is 1480, this is 1484, the spread is 4 cents. And that's important. You will know later in the video. I'm gonna point out on the things that's important. Okay, this is called the tape. This is called the tape. The tape here tells you real-time transaction. So exactly at what time it's being transacted, the price and the size. Okay, 200 shares at 1480. So 1480, right? Usually it prints red when it's going down. Okay, so when it hits the ask, it goes green, and when it hits the bid, it goes red, and the white is the in between prices. So it's 1482.01. I don't know what these are, but I think those are dilutions. I'm not sure though. Okay, now basically that's a full run view of a level 2. Different level 2s, they might look a little bit different, but pretty close to each other. So every level 2 has a market maker, it has the bid price, and it has a size. Market maker, the ask price, and the size. Okay, and then you have the tape running with red and green and the white. Okay, so let me hit the play button. So now it's moving. Okay, you see how it's moving. Now it's at 85, 84, back 79, 75. It's dropping down. You can see those are the time and sale. Now that's a slow one, and that's why I'm showing you a slow one so you can see. Okay, so now it's at 83. Let's see, is it gonna it did not even print 83. So at 80, let's see, 74. So it hit the bid at red. 72 at red. You see 70. When it's hitting the bid, it's going basically red. So this is basically going down. You see how it's dropping? And the spread is now 7 cents. It's 7 cents. It's 9 cents now. 7 cents. So it's a big spread. Not the biggest, but it's big. Okay? I've seen $1 and $1.50 and $2. Okay? This shows you the thickness of this is a thin stock. Okay, a thickly traded stock, it's really heavy. It has a big stack here and a big stack here with thousands and thousands and thousands of shares. So let me just show you another example. For example, this is a low priced stock. Okay, $1.42. The spread is 1 cent. Okay, this is like, look how heavy are the bids are, and it's stacking, and then you can see if it's red, that means the price is going down. And if it's green, that means the price is going up. People are buying the ask. It's really wanted. People really want it. It's heavier on the ask. That means, sorry, those are the supply on this side, on the ask, and the demand is on the bid. The bigger the demand is, the better for the price to go up. And this is faster. You see how fast it's going faster. and I can read them. I can read them really well. I can read the sizes with the prices really well because I have experience in that. And we'll go over it in the video. But there is one thing I would love to show you, because I'm gonna be specifying it and I'm gonna be talking about it in the video. Just give me 1 second to see. So this is a $6. Here's the bid, here's the ask, here's the price, the tape. Okay, very important, the tape. But I wanted to show you something. Okay, I'm gonna pause the video on something. Here you go. I paused the video on this. You see that's price 628, 75,000 shares, 75,831 shares. Guys, this buyer, okay, puts in roughly $476,000 order. $476,000 order. Okay? Look what happens. After I hit play, I want you to watch whether it's gonna actually run here or not. You're gonna see it. It's gonna run or not. And is it gonna stay at this level, 628? Look what happens. So now it's 77,000. All of a sudden it disappears and the price drops 25. Okay, the order just goes away. 23, 24. Okay, and that's called spoofing. I'm glad that I caught it. It's not easy to catch these kind of things, guys. But this is spoofing. Basically, what this guy got the stock to drop down all the way from 28 to 23, 5 cents. Right, because he faked out an order. We're gonna talk about it later on. When is it fake? When is it not? Okay, so basically that is a level 2. I know it looks intimidating. It's hard at first, but we'll talk about it. Just explaining you visually. The green means it's hitting the ask. The red means it's hitting the bid. Okay, the white is in between. Not a lot of in between, but I see lots of them on the low cap and low priced stocks. So you can see here, $13.10. This is a stack. They call it a stack. If the stack is big, that means there's more demand on it. There's a lot of people want the stock, want to buy the stock or want to sell the stock. It depends on where it is. Using different market makers. I like it when I see a big stack. It's for me, it's visually better and it gives me more confidence than having one market order with a big, huge size. Because that can be a fake, but when you have a big stack with large orders, it's rarely a fake. So that's it. Basically, that's it. My friend, I cannot stress enough to tell you how important level 2 is. It's like a magic ball, but some users, they don't know how to use it. They get crushed. And some they know, and it gives them an edge in the market. So let's start with the pros of using level 2. The first pro in level 2 is it shows me the spread. And the spread is the difference between the ask price and the sell price. And as a new trader, or if you're struggling, keep your spread tight. So don't trade stocks with high spreads, 3 cents and less. What the spread helps me with, identifying my stop loss wiggle room. So it tells me, I can tell from the how volatile the stock is. I like volatile stocks and I can trade them really well. But as a new trader, sometimes you can't. So you stay away from it until you gain experience, and then you start moving into volatile stocks. Better and better, the more edge you have, okay? So that's the first thing, spread. It also tells me how thickly traded the stock is or how thinly traded the stock is. How thickly the stock is traded, it shows you how much shares, how much people involved in this stock. It tells you let's say the bid of the high stacks here, bit large orders, it tells you that the stock is gonna move, but slowly. If it's thickly traded, the stock moves slowly. And it is recommended for some new traders as well. And if it's thinly traded, it's gonna move fast. So it's really volatile, it's gonna move fast. I also like those. I can trade them fast, but it needs experience. I've lost a lot of money trying to trade them at first. And that was one of my biggest mistakes. Pro number 3, it helps me identify good support and resistance areas. It helps me confirm them while I had them on my charts. So I see the transactions right at my levels, and it tells me if the buyers are really good here or the sellers are really good here. It tells me a lot. It helps me with my entry right there, right then. And that's a big bonus I actually use with level 2. Pro number 4, it also helps me identify the pullbacks that I get, because remember, I've probably said in previous videos that I am not an aggressive trader. I'm a conservative trader. So I wait for pullbacks, and it tells me whether this pullback is an aggressive selling or it's profit taking. It helps me a lot, guys. This is really important to me. And I'll show you later, probably on the later videos, when I recap day trades, I'll show you why I entered here or exited here based on level 2 as well. So pro number 5, I use it for entries and exits, where I see a heavy rush on the tape as water flow, boom, 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 a lot of green, or a lot of red with big sizes. I can see them. I can see them fast because I'm used to it. And we'll get to that later, okay? But it tells me when to enter. It helps me make a decision when to enter or when to exit the stock. So let's start with the cons. And that's where no other traders actually explained it the way I'm gonna explain it to you right now, okay? So I'm gonna divide it into 3 pieces. The common cons, and that's common. There's nothing you can do about it, okay? And you have the cons using level 2 on small priced companies or small cap companies, and on large cap companies. Cons on large cap companies. So let's start with the common cons. The first one, they all cost money. So you have to pay for that service to get that data. It varies from platform to platform how much would they charge. Con number 2, information overload. There's a lot of information, it can get you confused, and later on I will tell you at the end what I look for. In this, I eliminate a lot of information that I don't need, okay? But it can be confusing for new traders or for new users. Con number 3, it requires fast attention. You're not gonna have it at first, but you can build that attention. You can build that fast attention. See, when you watch a movie, sometimes you watch a movie once, you miss a lot of information. When you watch it again, there's a lot of new information that you haven't paid attention or you never saw at your first watch. And if you see it third time, it happened to me before, okay? You watch it the third time and boom, you see a lot of even more details and more details. And that's exactly what happens with level 2. You have to watch it over and over and over. It gets simpler, it gets easier. So let's start with the cons of small cap companies or small price companies as well. There is a lot of spoofing and manipulation. So big players, what they try to do, they try to place big orders and showing everybody that there's a big order and they cancel it the last second. So everybody tries to buy the stock, or they try to sell the stock at a certain price. And that's called spoofing. Is it legal? Of course not. But the SEC, the police of the stock market, they don't track them. Probably because there's 4,000 companies, they only pay attention to the big ones, to the solid ones, I don't know. But it's illegal to do, but it's been done a lot and over, and so many people have been faked out and spoofed on these kind of places. So can you make it to your advantage? Can you turn it into a pro? Of course, absolutely yes. Once you gain experience in looking into level 2 and watching level 2, you can identify spoofing and order manipulation. And that, my friend, it comes to your advantage. What you do in this case, you stay away from that stock and you don't play it. You don't participate. So for me, that's why it's an advantage for me. But as for new traders, it's not. You can get tricked right away. Also, can spoofing and order manipulation happen on large stocks? It can be, but it's a lower chance, okay? It can be, but very lower chance. You rarely find them because like Tesla at 300 or 4 or 250 or whatever it is, or Nvidia or AMD right now, or these big companies, people like don't have billions of dollars to put big orders. While on small companies or small cap companies, you see 1 million shares order, 1 million, okay? But it's harder to do and it's riskier to do, and I think they're more monitored by the SEC. That's what I think, I'm not sure. Con number 2 on a small cap companies. There's a lots of dilution. Dilution, what's dilution? Basically, if there's a gap up in a company, so the next day you find the company is up like 30 or 40 or 100% or 200% the price, and then you start planning your trades and this, the company itself starts selling their own shares to raise money in not in a legal way. It's in a hidden way, and you can identify it on the tape where you see orders flowing, and nothing is happening on level 2 on the bid or the sell, and it's weird. And when you start finding these funny moves like this, also same thing, you stay away, you turn it into your advantage. So that con can turn into a pro once you identify. So identifying it becomes a pro, and you stay the hell away from these kind of companies or trading these kind of stocks. Same question people might ask. Big companies can dilute? Yes, they can, but it rarely happens, okay? It rarely happens, and if they do it mostly in a legal way. The third con for small cap companies or low priced companies, there can be big hidden orders. You see on level 2, when you're placing your order, you can actually have hidden orders and not show on level 2. And some people ask, why bother, Zach? Why bother then using level 2 then? And I will tell you later, why do I use level 2? But hidden orders, you can tell also with hidden orders. Orders are getting executed and the level 2 is not moving. The bid and ask are not moving. And that can really affect the market or affect the stock that you're. And when I see big hidden orders, yes, there's always hidden orders, but not a lot, okay? But when there's big hidden orders, I can see them, I can pinpoint it, I stay away from the stock as well. There's big players, I'm not as big as they are, so never think that you can beat, as much as you have money, never think you can beat big players or the stock market. Again, can you use it to your advantage and turn it into a pro? Definitely yes. So when you pinpoint, you identify big orders being executed with no hidden orders, you notice they're hidden orders, okay? That's when the tape starts running as well, and the bid and ask are not moving. You can tell, you identify, you stay away from that stock. Guys, that's why in general, 80% of my trades are not with small stocks. Yeah, 20% they are sometimes. I've noticed a good, and I don't notice all these, I still trade it. It can happen that none of these are happening at a certain stock, but I'm not hungry with I've been manipulated, I've been faked out so many times with small stock companies. And if you want, you can go back if you want more details and why I don't trade them and how, if I trade them, how do I trade them? You can go back to my videos, bad news versus good news, or news affecting the market or something like that. I will leave a link in the description. At least it's so informative, guys. Go watch it. Now let's start with the cons for large companies, okay? So all the small companies, small priced, yes, they can happen in large. So I'm gonna put they can happen, but the major one that happens in large companies is algorithmic trading. So there's a lot of computerized, and it's not only people trading. It's not only me and you and the institutes, and there's a lot of algorithms that's trading, and they get triggered by certain words, they get triggered by certain levels, and they start selling. And how do you know that's algorithmic trading? You can tell from the order size or the execution size that's been, it doesn't show on level 2, so it executes right away. It's a market order. And by the way, market order, the next video, it's gonna be about order types and stuff like that. So don't worry about it right now, but on the tape, you can see, for example, 100 shares of Apple, for example, 100 shares at this, 100 shares, 100 shares, 100 shares, 100, it's running 100 shares, 100 shares, 100 shares. And yes, it eats off the bid and ask, but you don't know why is it 100, 100, 100, 100? It's algorithm. They set their sizes at a certain amount. It doesn't have to be 100 bets. Mostly I see them 100, but it can be 50. And it keeps running 50, 50, 50, 50, 50, 50. You can see it. I can see there's, when it's a heavy algorithmic trading, there's lots of algorithmic trading on big stocks, but some of them are not that heavy, okay? They just get triggered based on a news, a press release, bad news, good news, it doesn't matter. When you see them, okay, I stay away too. And it doesn't happen often, but I stay away. And is that can turn out to be a pro in my experience? Yes. When I identify heavy algorithmic trading, I stay away as well. So my friend, every time I identify one of those, it turns out to be to my advantage. Because I stay away from them, I minimize my risk. Basically, this whole business of trading and investing is risk management. We're in the business of risk management, and I minimize my risks. That's why I count them as pros once I know how to identify them. And after you've known all the pros and cons about level 2, here's the big question. What did we realize out of this whole thing? How can we summarize all that's been said about level 2? Level 2 basically shows you the behavior of the stock. So it tells you how the stock is behaving. And that's the beauty. That's why I use level 2. It doesn't tell me when to if I'm gonna trade the stock or not. It doesn't tell me stuff like that. What it tells me, it shows me how it's behaving based on the spread, based on the tape, based on the orders that's flowing, based on a lot of, is it dilution? Is there any dilution? Is there any fake orders? It tells me how this stock is behaving, and based on that, I actually make my decision whether I'm gonna trade this stock or not. After I make my decision, then I use level 2 to help me with my entries and my exit. Now, let's start with the common mistakes that actually traders do with level 2. Please guys, pay attention to these mistakes. They are very important. Mistake number 1, they chase large orders. Do not chase large orders. When you see a big order there, it doesn't mean the price is gonna go up. It can be canceled the last second. Mistake number 2, people ignore the market context, the market sentiment. They start ignoring everything they've prepared once they look at level 2, and they get extremely focused and ignore everything else. The market sentiment. No, level 2 is just an extra tool in your pocket. That's it. It's not something you depend on 100%. None of the tools that we've been through in my crash course, go back and watch, we depend on 100%. They all have to come together. Mistake number 3, people get the overtrade. They think it's like a game. They watch level 2, it's like a video game. And they go overtrading. Oh, I made him, well, there's a bid here, and then he starts hopping here and back and forth. Guys, they lose a lot of money. I've seen so many disasters. Mistake number 4, misleading fake walls. Some big players, they bait you in. You need experience to spot those. Mistake number 5, they actually rely on it as if it's the only tool. And that's the biggest mistake in my opinion. It has to align with your level, with your charts, with your this. It just gives you extra confirmation. The beauty about this tool, it's telling you what's happening now, right at the moment. That's all. That's the beauty. It doesn't tell you the future. It tells you what's happening right now. Please guys, don't fall into the mistake that level 2 is the only one. And anyone tells you on YouTube that it's the only tool that you need to use, please shut them off, close the video and move on. So what do I use in level 2? What's the main thing that I use in level 2? If you would ask me what's the one thing that you would use from level 2, I will tell you the tape. I can ignore the rest. I usually look at them. Yes, it confirms things for me, but the tape is everything. The tape is the actual light bulb that I have, the magic ball that I have, because it's telling me exactly what's happening at the moment. All the indicators that I've given you before, they're lagging indicators. They tell you after the fact. They print out after the fact. But the tape, it's current and instant. Again, yes, I would use the spread. I would see the big orders, then I would look at them. And there's also just a few, the stack. I would see it tells me how much liquidity there is. That's it. And this part, I don't have to keep looking at it to know if there's liquidity or not. But the tape, it tells me everything. The question, how can you get better at level 2? Now you know what level 2 is. You know the pros, you know the cons. Zach, how can I improve on reading level 2 and become like you? or become a professional reader at level 2? I cannot stress enough to tell you the answer is record and replay, record and replay, record and replay. Guys, go on level 2, record your screen, talk to yourself, say things that, oh, it's showing me that, oh, here's an order flow, oh, there's big sizes. Record it, and if I were to enter, I would enter here. If I were to exit, I would exit here. Oh, look at what happened. Look at this, look at this, look at this, and go back. Go back and watch it and see. After you're watching it, see how your analysis is. At first, they're gonna be mostly wrong. You're gonna laugh at yourself at first. But bit by bit, later by later, and maybe not. Maybe actually you'll get it quick and fast, but I'm talking in general, okay? Later on, you'll start catching up on your mistakes that happen while you're looking at level 2. And look at it over and over and over and over. Every time you record, every day. Do it on a daily basis if you can. If you can't, and you're away from the trading session, have someone to record it for you. Actually, there is simulators that records for you the market, and you can do it at night. But get your eyes trained on it. Get your eyes trained on it. When I see it, I see everything. And honestly, I didn't do it at first. I wasn't good at it at first. Now I do it. Now I'm good at it. I have 8 to 9 years now. I'm getting into the 9 years of experience. So guys, don't think you guys are gonna be like me right away. It's okay. I was in your shoe, and someone else is gonna be in your shoe while you have experience and you teach them how to do it right. And remember when I told you it's like a movie? Exactly. So go and watch it again, watching it. You'll realize a lot of things that you haven't noticed at the first time you saw the level 2 or you're reading the level 2. And in that way, I promise you will get better. I believe in you. I believe you can do it. Easy, you can do it. Even you're watching up until this point, that means you're a smart person and really want to learn. And those are the people that will learn trading. As I said, in the next video, I'm going to be diving into different order types and how to use them in day trading, in swing trading as well. It's going to be up soon. Click here to watch it. And if you haven't watched my crash course, please go ahead and click here and watch it. It's very informative. We'll see you in the next video.